Hello, everyone. Thanks for tuning in again to another episode of Coffee with Nick. Um, it's Thursday, about 3 p.m. in the afternoon in Singapore. So a couple more hours, about 6 hours away before the US market opens. So I want to do a quick recap of my portfolio over the last 2 days, and then also maybe chat a little bit about Facebook, which released its earnings yesterday. And that's actually my largest position. So I thought I wanted to take this out separately to kind of have a more in-depth discussion. So here at Coffee Unique, we are all about using the fundamentals to find the right companies and the technicals to find the right timing. And if you find my videos helpful, please help to like and share and also smash that subscribe button. All right. So very quickly, just going to kind of a quick look at my portfolio. I post it almost on a daily basis on my Twitter, and you can follow my Twitter feed as well here. Here's my handle, Nick Love Coffee. All right, um, so after Tuesday, my last video on Tuesday, and then the market opened, and Tuesday was a tough day. I think my portfolio is now slightly over 2% on that day. I was top out of a number of positions, some of which I got back in at the close of the day. I have that here, I think. Yeah, so that's on Tuesday, right? And then I got stop out a whole bunch of positions. Some of them for a gain, some of them for a loss, and some of them quite bad for just a 1 or 2 days kind of hole. All right. So anyway, yesterday was slightly better. Didn't manage claw back all of that losses from the day before, but got some of the positions that I got back in after I got stopped out, kind of went up a little bit, like TTD, and then also MELI as well. So that's my portfolio, up about 0.6% yesterday. Overall the market was actually very strong yesterday. So in fact, if you look at ARK and all this, they're up significantly more than what my portfolio was. So, but I guess because I wanted to be a bit more cautious after what happened on Tuesday, and because being stopped out so many positions, sometimes it's an indicator to me that either the market is not right or my strategy is not right. So I wanted to be a bit more careful going to yesterday. Not much changes to where my portfolio was by the end of Tuesday. So only change yesterday was adding adding a starter position. Usually that's for me is about 5% position for Tesla. Right at 200 SMA actually. All right, so we can have a quick look at that later. So anyway, this is my portfolio right now. So about 59% invested across 7 positions. So Facebook being largest, Amazon followed by Amazon, TTD, Fiverr, which is actually a position I started on Tuesday. It's a new position, but I started at end of Tuesday. Then Tesla that I got in yesterday. Then MELI, Zoom. All right, so 7 positions in total, about 40% cash. Depending on how the market looks like today, I might deploy a little bit of that cash, some parts of the cash, maybe about 5 or 10%. I'm actually looking at some of the China related names. So I got out all of them just when the news started coming out about the regulatory crackdown last Friday. And what I've done is I stayed out of it completely, so kind of avoided the worst of it. But then now it looks like it's bouncing back, and I'm just looking at it, not 100% sure if I actually will get back in, but I'll monitor a bit more to today when the market opens. So right now, let me see. All right, where shall we go? All right, the charts. Right. So these are my 7 positions. I just want to have a quick run through of them. I'll do Facebook last later on because I wanted to chat more about Facebook in more detail because the earnings came out yesterday actually. So anyway, looking at the other positions first. So this is Amazon, my second largest position, which is actually releasing its earnings tonight in Singapore time. Right? So after the market closes. So Amazon kind of pull back a little bit these 2 days. Settling right at is this one is the 10 EMA. So yeah, the nice run recently, pull back, another nice little run here, and then pull back. I spoke about Amazon, in fact, my first video ever. So my first video, and I explained my reasoning for why I think Amazon is going to be is going to have a good earnings, right? obviously one of the reasons I mentioned as well was about Amazon ads. So have a look at the video actually if you want to find out more. But I'm pretty I do believe that Amazon is likely to have a very good earnings. How the market reacts, of course, is totally different. But what I find here is that because it has pulled back a bit, and so it's not as extended as, say, for instance, Facebook. So there's some potential, I think, there for a nice market reaction if the earnings turn out to be good. All right, we'll see what happens. So Zoom, all right, Zoom. I had a video about it. In fact, on Tuesday, I think that was the video I had on Tuesday. That was kind of more in focus around Zoom and why I think Zoom, could be a good buy going forward. And I have a position right now. It's a bit under the 200 SMA. It kind of hold up pretty well this couple of days around this region. It's, right above this blue line that I've drawn, which is actually drawn to a low here, right? So it's kind of holding above there, and I actually like it enough that if it I kind of expect it that over the next couple of days or next week that eventually it will break over the 200 SMA, and if that happens, I think I will want to increase my position in Zoom as well. All right, so but I'm going to wait for it to give me a bit of a signal around that. So probably when it breaks above, let's say maybe the low of this bar here, of this candle, all right, yeah, and then if it gets over the 200 SMA, that could be around when I want to look to add to it, because it might just consolidate a bit more, couple more days here. Then TTD got a nice little profit on it. I can't mention that when I close it out, about 8% profit when I close it out on Tuesday. In fact, I'll stop out by this drop here. Unfortunately, my stop wasn't wide enough back then, and I think I might stop around here or something, and it got stopped out, and then it kind of bounced back up. So I lost a few percent of profit here, but then I did want to get back in because I think it is a stock that I want to be in, because obviously it's going to ride on that advertising revenue boom tailwind that I spoke about previously. So anyway, it kind of had a nice bounce again yesterday. So right now I'm going to hold on to this position, and then I kind of expect at some point it will pull back here, maybe to the 10 EMA, or even maybe to the 21 EMA, depending on where we are. But if it pulls back and it holds above this line, this blue line here, all right, that I drawn, which is actually to this low here, I should mark that out. Then I probably want to add to it when it pulls back at that point, right? So not quite right now. For now, I'm just going to hold on to the position that I have. All right. So there's TTD. This one is MELI. A little bit similar to TTD in that I had a position. I was stopped out by this long candle here, unfortunately, and then it kind of came back up. It happens, right? This thing. So I did get back in at about half my position. Originally it was 10% position. Got a little bit shook out by it, and I kind of got back in a 5% position. A nice bounce yesterday. All right, we'll see where it goes. But if it pulls back again, anywhere between the 10 to 21 EMA, I probably want to add this position as well. Here, and then we have Fiverr here. Similar. I think I probably want to do another more in-depth video on Fiverr, because I saw some investment YouTuber who talked about Fiverr, and I was really very impressed by the analysis. So I probably in the next video or something, I do want to kind of talk a bit more about that, what he shared as well. But I actually got into this position before I watched his video, but after that I was quite happy that I watched, that I had the position after I watched his video yesterday. So I got into this on end of Tuesday. I saw that they had a really good nice volume on Tuesday. A lot of stocks were down, but it was actually one of the few growth stocks that was green. So I got in nice bounce yesterday as well. All right. So and then if this one pulls back, I do I do want to get back in. So if it pulls back anywhere between the 10 and 21 EMA, I think I probably want to increase my position as well. All right, Tesla. I think this one is probably one that I'm going to hold for a bit longer. I'm going to try to give it a bit of a wider stop so that I don't get stop out. I bought at I actually got stop out on Tuesday. I came back in yesterday at, right smack at the 200 SMA. I'm going to try to hold on to this one if I don't get stop out. And then I've seen some initial analysis of its earnings. It seems pretty good. I'm going to dig a bit more into that as well. But for now, I'm going to hold on to this position. Not going to add to it, until I see where, that looks like a wedge to me here. That eventually the price will have to resolve one way or the other, either up or down. We'll see. I have a feeling it'll go up, right? So we'll see what happens. But I'm going to hold on to this 5% position first and wait for price to be a bit clearer at which way it's going, right? So those are my 6 out of my 7 positions. The only one I didn't talk about is Facebook. All right. Okay. We'll come back to the chart in a bit, but I just wanted to share a bit more on some of the earnings and what came out yesterday. So Facebook released its earnings yesterday, and the earnings was fantastic, right? Like just in terms of the actual numbers it delivered for Q2, it was fantastic. So there's a doubt about that, and I don't think anyone even remotely disputes that the earnings was great. A couple of tweets here that talks about earnings. So revenues was plus 56%, EPS plus 101%. All right, operating margin up 11%, etc. So fantastic earnings report. Here's another one talking about the earnings. Same revenue up 56%. Operating margin up to 43%. Year on year from 32%. Net income up 101%, etc. etc. This is the daily active users up 7%, etc. So it's really fantastic kind of earnings report that it came out, that it delivered. All right, it beat estimates as well. So so it's not just that it was great; they actually beat estimates. But the stock was down. I think at one point in after hours when the earnings came out, I think at one point it was probably down like 5%. I think it closed about maybe 3.5 or 3.8% down. Still, we'll see what happens when regular trading starts today. But obviously, the initial reception that wasn't great. Now, the reason for that primarily is because of its guidance that it gave for Q3 and Q4. Right, so the guidance for that was that it wasn't good. I mean, it will be that likely growth will decelerate. So I have this here. This is for Q2, that it just kind of the earnings. Okay, so I want to point out what it actually said here. All right. So if you look at the report that it released yesterday, it says here, in the third and fourth quarters of 2021, we expect year-over-year total revenue growth rates to decelerate significantly on a sequential basis as we lap periods of increasingly strong growth. All right. So because it had really strong growth in Q3 and Q4 of 2020, so Facebook kind of expects that, okay, because of that, we likely see the growth, the very strong growth that it had like delivered in Q2, 56%, revenue growth, that is likely to kind of decelerate. We're not going to get a 56% growth anymore. Now, what is interesting is that this guidance isn't actually new, because if you go back to its Q1 earnings that it released in April 29, all right, the last earnings, I got it here, and I'm going to point out what it says there. All right, so this is actually for Q1 earnings that it come on April 28 actually. So if you go there, and we will see in a minute what was the growth rate there then. But notice what it says here, right, at that point. In the third and fourth quarters of 2021, we expect year-over-year total revenue growth rates to significantly decelerate sequentially as we lap periods of increasingly strong growth. In fact, word for word, exactly what it said, yesterday. All right. So this guidance for for the deceleration in growth for Q3 and Q4 isn't actually new. It was something that it brought up. It already kind of informed investors and analysts, in April when it released its Q1 report. So just take note of that. So this isn't actually new, right? So we'll come back to this again later when we look at the chart. Now, And during Q1, it actually also gave some information on what you expect Q2 to look like. So we expect second quarter 2021 year-over-year total revenue growth to remain stable or modestly accelerate relative to the growth rate in the first quarter of 2021, right? So let's have a quick look at what was the growth rate in Q1. So in Q1, all right, the revenue was actually 48% growth, year over year, all right, and EPS was plus 93%. So if you compare that to Q2 earnings, and I have that here, all right, so I'm going to pull this a bit nearer. So revenue went from 48% to 56%, so that's growth rate, right? So not only it grow, but it actually grow faster as well, right? So and then you look at the EPS was plus 93% in Q1, it went to triple digits here, plus 101%. So depending on how you read this and whether you feel like that's a model, it's definitely not stable, right? Because that was what Facebook was saying. They actually expected this Q2 earnings, revenue growth to remain stable or modestly accelerate, right? So you could look at this as a modest acceleration, or you could look at this as perhaps a bit more than modest, a significant acceleration, I would say, particularly when you relate to the EPS growth. All right. So anyway, so my point here is that this Q2 earnings on its own was actually a really fantastic number. If you look at the size of somebody at Facebook, right, to deliver EPS growth of triple digit, 101% growth and revenue growth of 56%, that's just like incredible. And operating margin went up as well. So on its own, this report was outstanding. Facebook delivered on whatever anyone expected it to deliver. Yet the stock came down because of the Q3 and Q4 guidance, which wasn't new, right? So like what I mentioned earlier, they delivered the same guidance for Q3 and Q4 even during the Q1 earnings on April 28th. All right, so I'm going to point that out on the chart. So when they released that earnings report, on 28, after the market closed, on the 29th, the stock actually had a big jump here, right? So about over 7% jump, from the day before. So so in Q1, the earnings, the results on its own wasn't quite as impressive as Q2 results. They delivered the same guidance for Q3 and Q4, but we had a big jump in price, and then there was a pullback, in as I think over the next couple of days, investors started to absorb, and make sense of that news. But after that, the price actually had a very good run here, I think of over 10%, close to 10%, or a bit more, kind of run up here to this point here. So my interpretation of this is fairly simple. The market knew exactly what Q3 and Q4 is going to be, all right, because Facebook gave it exactly the same terms as what I pointed out earlier. So the market understood this is Facebook. I don't know whether they're sandbagging first of all, but let's just assume for like they are not. That the market already knew this exact guidance for Q3, Q4. They look at Q1, and then the stock went down, up, came down, pulled back, and then went back right up, And now Q2 actually delivered on whatever they said they were going to deliver on Q2, plus probably a bit more than that. Like what we saw, it probably a bit more than just a modest kind of acceleration. It was a pretty strong report on its own. So my interpretation of this entire thing, and looking at the price chart, is that investors knew exactly what Q3 and Q4 is. They should have priced that in, if not on the initial day when Q1 was released and they actually delivered their guidance for Q3, Q4. But even at least over time, they will have absorbed the news. Probably some people felt like this isn't such good news, they sold, etc. But overall the market decided that, hey, you know what? Even with this Q3, Q4 guidance that we already knew in April, we think Facebook should be trading higher. So the price went up, right? And now Facebook has delivered a much stronger Q2 than what we kind of analysts would have expected based on what it said in Q1. And then the same guidance for Q3, Q4. So my expectation here is that there might be some pullback initially, we'll see what happens. Sometimes after hours trading and regular session trading, that's totally different. But let's just say it goes exactly the same way. We see a 3 or even 4% pullback. All right, I kind of expect that might happen, and then they'll pull back a bit more over the next 1, 2, 3 trading sessions. But where I think this will go is that there'll be some pullback, and the market will see that, hey, we knew about this. We had priced this in previously, this guidance about potential growth deceleration in Q3, Q4. No reason to kind of readjust, to reprice that based on something that we already knew for 3 months or more. And then they will look at Q2 and what a strong results that is, and then probably extrapolate to say that, hey, Q2 was outstanding. Maybe this is a sign that advertising revenues will continue to be stronger than what we can anticipate when we first delivered that kind of guidance in Q1 about Q3 and Q4. Because if you look at a lot of other advertising revenue, digital advertising kind of companies like Snap, Twitter, Google, etc., it points towards that way, right? That overall the industry is kind of being repriced for a stronger advertising revenue growth this year. So my expectation is that Facebook should benefit from that. And one reason for that as well is Facebook isn't actually super expensive, when you look at across the big tech companies, the Microsoft, Apple, Amazon, Facebook, Google. So Facebook is kind of more reasonably valued in that sense. So my expectation here is that investors, after a couple of initial days, the price might pull back a bit, but they'll kind of recognize that, hey, we knew about this guidance. We have priced that in for Q3 and Q4. We priced that in already. Now, Facebook has delivered an outstanding Q2 report on its, as a standalone, right? And then, relook at, how the advertising revenue landscape looks like this year, repricing that, and then maybe we'll see that, after initial pullback, the price might still continue to go up. Nobody knows for sure, right? So, but that's my kind of expectation around how this will play out. I'm giving Facebook a pretty wide stop here, as you can see. Like, eventually, if the price doesn't react the same way that I expect it, it has a sharp fall, then yes, I would still get out, But at this point, looking at the report, looking at how the chart of the how it has performed over the last couple of months, my current thinking is that I want to hold on to this if possible. If the price doesn't pull back way too much, then yeah, I probably want to stay in Facebook. I got a nice cost basis for this one, so I kind of like to hold on to it if possible. So alright, so that's pretty much what I want to chat about today. I'm not going to do too long a video today. So Amazon is releasing its earnings today as well. So I'm pretty excited because that's my second largest position as well. So fingers crossed on that. Alright, hopefully you found this video useful and helpful. If you do, please help to like and share my YouTube video, and also to subscribe to my YouTube channel. Alright, I'll see everyone on Saturday again. Alright, bye.